Today was actually the last day of my summer job, and I personally start school back up on this upcoming Monday. And it's kind of weird. You would think, especially for someone like me, I thought too, during the summer I'd have a lot more free time. But this summer I was actually like super busy. I was not able to put out as many videos as I wanted to. It seemed like I was like working my job so much, and I was like so exhausted and so dead by the end of the day. I would literally just go to bed. But during the school year, I actually have a lot more time because my work hours are a lot less and my school hours are obviously more. But in college, you seem to have like these huge amounts of breaks. But anyways, today I'll be talking a little bit about the current bull run we are on, what I think about it, and also whether or not I think the stock market, and I shouldn't say whether or not I think the stock market is going to crash, because that's just clickbait right there. I'm going to talk about the possibility of it crashing, I guess, and a little bit about what I think of that. So right now, if you've been investing for the past literally almost exactly 10 years or so, you've pretty much been in a bull run for the entire time. So what a bull run actually is just very, very basic terminology. It just means that the stock market and the overall economy has been performing pretty well, and it's actually to a specific percentage, but I don't think a lot of people actually care about that too much. It pretty much just means the economy's been performing well. And if we look back 10 years or so during the Great Recession, when the housing bubble popped and things like that, and whole economy kind of took a downturn. And since then, we have actually done incredibly well. The S&P, Dow Jones, NASDAQ all have been doing very, very well. The whole economy has been doing pretty well, and employment's been down, pretty much all green, thumbs up across the board in terms of economics, as well as the stock market. So recently, I think it was actually like 2 days ago, I'm recording this video on Friday, I think it was either a day or 2 days ago, we actually just hit the longest bull run, I think ever, or at least in modern time. And that's a pretty big milestone, but also with that big milestone comes a lot of worries, because if we look at, I don't know how well you guys are actually going to be able to see this, but if hopefully the lighting's okay. If you look at this little chart right here, I drew it out very messily, not a very good writer. 2006, economy was going up. We hit 2008. We were actually at a pretty large bull run there as well. And then as soon as 2008 hit, 2007-ish, the Great Recession happened. The entire economy, stock market, everything went down a pretty significant amount, around 30-40% or so. But then after 2008 until now, after that somewhat short-term drop, actually, we have done nothing but gone up. And we are right up here right now. And a lot of people think in this spot right here, we're probably going to go back down. And I will admit that I can't do it. I don't know a whole lot of people that actually can do it, but it is almost nearly impossible to not only predict the stock market, but also just predict, the economy as a whole. But I'm not going to be naive in saying, the economy is quite cyclical. There are a lot of parts of it that are cyclical. It doesn't match up perfectly to every single chart in the past. I think it is smart, though, to look at the past history, see what's happened in past events like this, and sort of try to figure out maybe perhaps this might be what happened because it happened in the past. Even though at the same time, this is a bit of a logical fallacy. Just because something happened in the past doesn't mean it's going to happen in the future, but I still think you should take a look at it. So obviously, if we look what happened with the Great Recession, we were on a bull run, we were doing very well, the economy was going up for a few years, and then it hit a significant downturn. And when that happened back then, it was a very specific event. It was sort of somewhat unforeseeable event. A lot of people didn't see it coming. There was very, very few people. I think it's The Big Short. Yeah, it's actually The Big Short. That movie, super interesting movie. It goes over it in pretty great detail. It's entertaining and educational movie. So definitely check out that if you're interested in learning more and also seeing a pretty good movie. But I think it's been awesome that we've been on this bull run. I think it shows a lot of good things about the U.S. economy as a whole. It shows a lot about the tech sector. The tech sector has been doing exceptionally well over the past 10 years or so. If you've been invested in pretty much any tech stocks, or really any tech stock or any stocks at all, you've probably been doing pretty well. One thing I want to talk about this bull run that a lot of people don't talk about. So there's a lot of, I know personally, YouTubers out there, just bloggers, financial advisors, people like myself that like to talk about investing and I don't like to personally, but other people out there that like to kind of brag about how well they've been doing over the past few years or so. And just to know, you could pretty much throw a dartboard or throw a dart at the newspaper section of the S&P 500, pick a handful of stocks, and if you would have bought them in 2008 and held them to now, you'd probably be in the green and you'd probably be doing pretty well. Just because the whole economy has been doing good, it isn't actually that hard to be a successful investor. And one thing to note, in general, if you hold stocks for a longer period of time, especially in the U.S., this isn't applicable to other countries. If you hold decent large companies for a long period of time, you're probably going to get pretty decent returns. Investing in the stock market actually isn't as hard as some people make it out to be. I think a lot of people just make it harder on themselves and make it a little bit more confusing for themselves. But anyways, talked a little about the bull run. I'm going to talk a little bit more now about whether or not I actually think that stock market's going to crash somewhat soon or go into another recession or anything like that. So in 2008 and 2007, when the stock market crashed and we were in a recession, this was very, very short-lived. A lot of people out there are worried about jumping into the stock market because it's at all these all-time highs. They think that it's going to go down sometime soon. And as Warren Buffett says very nicely, a stock market crash, when the market goes down, this is great for investors, because if you're a long-term investor, let's say if you're going out and buying a car right now, let's say this car is $10,000. Would you rather buy that car at $10,000, $11,000, or would you rather buy it half off at $5,000? Now, I know this is a very simple analogy, and that's not actually how the stock market works, because maybe that car's a piece of crap when it goes because it went down to $5,000. But I think it is also a good analogy, because just because the stock market goes down, it doesn't actually mean that these are bad companies. It doesn't mean that these companies aren't still generating a huge profit and huge revenues, things like that. It just simply means that the economy has gone down, and typically a lot of stocks follow it. And a couple things I also want to comment about, worrying about a stock market crash or whatever, or even just talking about it in general. Videos like that tend to do very well. They're sort of clickbaity. I guess they're probably pretty interesting to you. Whenever I put out videos like, oh, the stock market's going to crash, or oh, the stock market's been going up like crazy, it seems to be getting more views, I guess just because people are simply more interested in that kind of stuff. But just a very basic personal finance rule and investing rule as well. So I have a little bit of money in my Robinhood portfolio. But let's say the stock market crashed, I lost my job, and I kind of stopped bringing in an income. I would never ever take that money out of my Robinhood account, simply because I have enough money left over on the side. You should always have some sort of emergency fund, or just like literally enough money in your checkings account to hold over, so you don't have to take that money out of your portfolio if something bad happens. During a crash, the worst possible thing you could ever do is sell, and a lot of people do that, not even because they necessarily need the money. It's not like every single person's getting fired from their job and needs to pay their bills and then put food on the table, stuff like that. A lot of people are simply selling because they're fearful and they don't like seeing their portfolio go down. But if your portfolio is going down and the rest of the economy is going down with it, that totally makes sense, and that is a completely normal thing to happen. Unfortunately for myself, I haven't been investing long enough to where that's actually happened to me yet, and I honestly cannot wait for it to happen, because it is very, very difficult for me to buy into, especially some of these tech stocks, like a lot of Microsoft, Apple, companies like that, when they've just been doing nothing but going up. I shouldn't say I'm a contrarian investor, but I do like investing stocks when they're on a dip. I do like looking for undervalued stocks, and that is a whole lot easier when there's a stock market crash, or when the economy's not been doing amazing like it has of late. And one other thing to note, why this might or might not be applicable to you, some of the stuff I'm talking about in this video, I myself am a very, very long-term investor. And when I say long-term, I mean I am literally planning on to hold some of the stocks that I own for, not just 1 or 2 years, but more like 10, 15, 20, 25 years, kind of at the minimum, like that 5 to 10 year range. And why I'm such a long-term investor: 1, because I'm very young. 2, because I really understand, I'd like to say that I really fully comprehend and understand the power of compounding interest. And another thing that I think I understand and kind of figured out at a young age, which is pretty lucky and fortunate of me, because I had the resources and the people telling me this. If you put your money away in the stock market in some very basic ETFs, or even if you just kind of encapsulate and have a well-diversified portfolio, you are almost guaranteed 7 to 10% every single year. And that's just something, just look at the stats, look at the history, look at how the S&Ps perform, NASDAQ, Dow Jones, all that stuff. Just kind of figure it out, and you can see that very clearly for yourself. I think where a lot of people get tripped up is they start worrying about a crash. They don't ever put their money in the market, because picture if it was 2010 and you were still worrying about a crash. You were still like, okay, the stock market's been performing well now for a couple of years or so, it's going to crash. And then 2012 comes along, you still haven't put your money away, it's still in a savings account, getting you 0.01%. And then 2013, 2014, it's been a long time, guys, and I'm sure there's people out there, even probably people watching this video, who haven't put their money in the stock market because they're afraid of the crash. So overall, my opinion on it, I don't really care if the stock market's going to crash or go down. It probably is going to go down somewhat soon, in my personal opinion. I personally think it will. And by soon, I mean in the next few years or so. I don't mean in the next couple of weeks. Like I said, I'm a long-term investor, so sometimes when I talk about soon or like not soon, I'm usually talking more of a longer period of time. And Warren Buffett, someone recently said, actually, it was an interview, I think a few months back, actually, he was on like CNBC or something, or maybe even like Yahoo Finance, I can't remember. And he basically said we are in the 6th inning and we have our sluggers up to bat right now in terms of how the economy and stock market has been performing. So if you don't know baseball, 6 innings out of 9, so we're about 2/3 of the way there, and we have our sluggers up to bat. So he thinks that we have quite a bit more room to go ahead, and the economy's still going to grow. And you don't have to take my word for it, or you don't have to believe me. You could say I'm a complete idiot, whatever. But Warren Buffett's a pretty smart guy. He usually knows what he's talking about. But anyways, guys, that's it for this video. I hope you enjoyed the video. If you did, definitely comment below. Let me know what you think about this general topic, about this huge bull run we've been on, and also, whether or not you think the market's going to go down sometime soon. I think it's extremely hard to predict the market. I don't try it. I don't think you should either. It's something that probably is going to help you a lot. And I personally, just regardless of how well the stock market is performing, will always keep funneling money into my portfolio. But other than that, guys, I hope you enjoyed the video.